Hey guys, welcome to my YouTube channel. My name is Don Aslam. I'm a 700k funded trader. In this video, I'm going to be showing my number one strategy that you can implement to pass these prop firm accounts or even grow your personal capital. Make sure to watch the full video. Let's get started. Now, whenever you've been watching my videos, guys, the ones who have been watching my videos for a while, I normally have already the key levels drawn out. Now, this strategy that I'm going to be speaking about is, of course, the break and retest. Super simple, guys. If you're a beginner, if you're starting out, if you're intermediate, if you're stuck at break even, trust me, this is the strategy that you want to try out. If you're trying out these SMC nonsense and all that kind of stuff, guys, it's not gonna work. You're gonna have to put in a lot of years, and still for what, like a 1 to 2, 1 to 3 years to reward. Sometimes you might aim for that 1 to 8, 1 to 10, but what do you try something with a consistent 1 to 7, 1 to 8? I'm gonna be using gold for the example. I've already marked out the key levels, but what I'm gonna do now, I'm gonna do something different. I'm gonna delete all these. So let's move this camera out of the way. Let's remove these drawings and let's go through each one, so you pretty much understand what's my thought process when I draw this. And this is the untamable beast, the gold, right? No one likes trading it. It's one of the most popular pairs, the most profitable pairs. When someone, like I've seen on prop firms, normally a lot of gold, when they post their statistics, gold is one of the most profitable pairs, the most traded pair. But so we're going to work off gold, right? And I'm going to be showing, of course, my back tested data, why I target these 1 to 8s. I've been recently trading oil, absolutely insane. I target 1 to 8s on that, 1 to 7s. It's just absolutely insane. But you're going to see why I'm able to pass these prop firm accounts. I've posted videos where I pass them sometimes within 1 day. Sometimes I passed once. I had 2 separate accounts. I passed a 100k account in phase 1 on 1 day. The next day I passed another account of phase 2. So I mean, you can check out everything, all the videos on my channel, you can check them out. I passed some 50k account in 2 trades, 100% win rate. I mean, it's just absolutely, the strategy is absolutely insane. All I ask for, guys, watch this video till the end. And there's gonna be timestamps as well, so if any parts you want to skip where you find the most value, just watch that over and over again, and I'm sure it'll provide a lot of value. So let's get started straight away. So first, what I like when I'm looking at a clean chart, right, I like to see, when we mark up the key levels, call them support resistance levels, supply and demand levels. You want to see where price mostly rejects, the most area where the rejections, the bounces are from. Once price comes back there, it has to show some kind of respect. Whether you lose or win the trade, I always say this, whether you win or lose the trade, that's a different story, but price will react from that level. So I've dropped a line. Now where do we see rejection? Now I can also use the line chart. Wherever you see the sharp edges, we can work around that area. But normally I don't like to use that in the beginning. If you're starting out as a beginner, you can use that, but in the it does, you're gonna have different lines. They're not gonna be accurate. I'm just trying to say, from the candle, if you're just looking at basic candles, and this is the best way to do this. I'm looking for major rejection area. So one, I can so in the beginning, I like to just throw them on there, refining them later. I don't want to draw each line and then refining it as I go. It's just going to waste a lot of time. I just like to quickly drop the lines where I can see rejections pretty much. So some there, I can see another one. I just work off this one as well. I mean, so far I'm using the bigger time frame for the example. I don't really use this time frame in my one-to-one mentorship, guys. It's a totally different, it wouldn't be fair to them if I showed what I show in the one-to-one mentorship. But I'm showing the concept, how this overall, the break and retest basically work, and how I apply it. Right now I've dropped the lines. Okay, so now let's try to pretty much refine this. So why have I dropped the lines the way I have? So before we get into this, let's quickly, and I'm gonna try to cover this, guys, under 15 minutes. So if I show, okay, supports here, resistance here, these are multiple wick rejections. Now here, when you see consolidation like this, or false breakouts, whatever you want to call it, right, sometimes you see candle bodies coming through. This is where a lot of a lot of people, where they get confused and they think, wait a minute, I'm seeing multiple candles coming through, so this can't be correct, this ain't gonna work. No, I'm on a big time frame here, 4 hours, notorious time frame, very highly respected. Multiple wick rejections here, multiple wick rejections over here, and multiple, look at this, candle bodies are closing above the key level. Now, so this is enough for me. This is enough, right? Once I've done that, then you can just pop down to a smaller time frame. Again, this is not how I show entries in the one-to-one mentorship program. By the way, if you are interested, guys, I'll just quickly go over that. You know, if you are interested in joining the one-to-one mentorship, the link will be in the video description. If you are, I don't take on beginners. If you don't even know what pip is, guys, I'm not a babysitter. If you got some kind of experience, perfect. You know, this is the elite. We post wins, losses, the students, myself. It's all about transparency, this game. I show my live trades, losing trades, everything, guys. You know, testimonial section, you can check that out as well. It's unlimited one-to-one sessions. Once you're in, I do ask a few questions, and then after that, once you're good to go, you know, it's we just take it from there. Okay, so coming back to the point now, let me just show you something else as well, guys. I want to show this because I don't want to show as well, I'm just coming up with this from nowhere, right? I want to show my back tested data. Now this normally does lag a little. It's just the amount of data I've collected on GJ, which is my bread and butter. Then I transition over to oil. GJ was showing me, as you can see here, like it's more than 5. I'm on the 4-hour time frame here, guys. One blue line to blue line is 1 week, one red line to red line is 1 month, so you can see how much data I've collected. Then I basically just, you know, posted all the data, you know, onto an Excel sheet, and then, you know, it just tells me, I can visually see how often the losses happen, how often the wins happen, and then, you know, it's all about collecting data, you know, having confidence in your strategy, and that's only going to happen, guys, if you just collect data. Now coming back to okay, so we draw the key levels, and I've shown you a pretty much a rough idea how I drop the key levels. Now it's all about entries and time frames. Now what you want to do, guys, is the break and retest. The way it works is there's a resistance level, there's a support level. Once that level is broken, so example, price is moving to the downside, right? Now that price is moving to the downside, I want to see some kind of rejection. Now from statistics, I've seen that price pretty much retests the key level or support resistance level, whatever you want to call it, pretty much 87% of the time, as we can see here. Now look at the accuracy of the key level that I've drawn. Pretty much, look at the accuracy, guys. Breakout, price comes back up. Look at the pinpoint, perfect. Look how clean that is, guys. Let me, by the way, make this camera a bit more small so you can see better. Perfect touch. I drew this on the bigger time frame, guys, and it played out again here. Look how it's playing out. Right now, there's ways to refine the key levels even more, how to increase accuracy even more, but of course I only teach that in the mentorship. Now I'm going to give you another example over here. Look at this, guys. So this is consolidation. Now consolidation is a serial killer, guys. It pretty much kills pretty much all the strategies out there. There are methods I show in my mentorship, you know, how to avoid consolidation, how to spot in advance. Let me put this over here so you can see better. Okay, so consolidation started over here. Wouldn't be taking the entry. We've got this huge breakout over here. This level is not really, you know, it's not fit for entry. Now this one over here, guys, or even this one over here, these two bearish candles, this one, let me just mark these so you can see better. This bearish candle and also this bearish candle, these two are perfect. Now bearish candle, why? Look at this, equal high above here, equal high above here, right? But it's that kind of a pattern, guys. I know straight away it's a strong bearish candle signal, and what follows after is super important, because if we lose track of this, then your whole this whole method's gonna fail. Now if I put this okay, so let's work off this, right? Bearish candle breaks through the key level, the support resistance, the zone, whatever you want to call it. Price comes back up. Now I've got a bullish candle, guys. Let's zoom in this. Let's dissect this one by one. You gotta, you know, candles basically, guys, candlestick are like language. Once you understand the candles, you speak the Forex language. Now what I'm trying to say basically is each candle is a letter, each candlestick pattern is a word. Together, the whole, you know, when you look at the thing, it's going to create a sentence, and that sentence basically is trying to indicate, is the market going to push downwards or is the market going to push up? You can have the A plus best entries, still the market could turn against you. No one ever knows what's going to happen. But what I'm just trying to say, guys, is that, you know, learn the language, learn the candlestick patterns, learn each candles, and you'll get a better idea what price is going to do. Now here, bearish candle over here. Now look at this bullish candle over here. It's forming a morning star almost, right? Now this one, but there's a problem with this morning star. It's a weak one. Why? Because this bullish candle over here, as you can see, the body of the candle closes below the key level. This bullish candle is a strong bullish candle. It breaks through the next this is where patience is very important as well. You got to wait for the candlestick patterns to complete and the candles to close. The next bearish candle comes back down. Now whenever you see a pattern like this, guys, and I say this to the students in the mentorship program as well, the bearish candle, when it comes back down, totally ignore the previous candle. Vice versa, if this was a bearish pattern, ignore the first candle. Why am I saying this? So buyers tried their luck. They pushed the price up. The sellers were like, what are you doing here? You got no business being here. They pushed the market all the way back down. So in my mind, price was always supposed to be, needing my glasses off. Price was always supposed to be down here. Next candle now is a bearish candle, guys. The next candle is a bearish candle. A decent size strength bearish candle. The next candle, guys, look at this, is a doji bullish candle. Look at the volume, look at the body size of the bullish candle. The volume of the buyers is decreasing heavily. Here you can take your entry pretty much from here, and if you have a decent, I mean, you can even take it from here, but then of course you'll have a, this is why backtesting, I mean, you pretty much would survive the your stop loss from getting hit, but it depends. If you're with the prop firm and your spread's a bit high, with gold there are a tiny bit, but maybe you would. But I when it comes to back testing, so collecting data is super important. When I collect data, guys, I make sure I know I have a fixed TP, I have a fixed stop loss, and I know where I enter from, why I'm entering, what's my stop loss, what's my TP, and why I aim for oil 1 to 8s, because I've got the data and I know that I don't want anything less. Sometimes I might go for a 1 to 6, 1 to 7, depending on the market, volume, momentum, everything. But this trade alone, guys, look at this, 1 to 11, absolutely insane, absolutely insane. I can see another example over here. Look at this bullish candle break, a strong, let me just show you some. I want to keep this video nice, short and simple, guys. Nice, short and simple. Strong bullish candle. Let's go. Let me turn on the indicator that I'm looking for. Candle strength is okay. Look at this, guys, 100% candle strength. Let me zoom in a bit more so you can see this better. 100% candle strength here, this bullish candle. Why? Because there's no wick at the top. The sellers are not pushing the candle down. There's too much bullish volume. Again, look at the accuracy of the key level. Look at this bullish candle. When you see a wick like this and it's touching the key level, you know what that tells me straight away? In a split second, this is a strong resistance level. Price is respecting this area. There had to be a lot of volume, a lot of strong buying pressure to break through this key level. Once it does, now they say trading is mass psychology, so psychologically I'm going to think, wait a minute, buyers push this market up, so psychologically why would they want to come back down? It doesn't make sense, right? A bird doesn't fly just to land the next second. When it flies, it's like an airplane taking off. When you take off an airplane, guys, it just goes higher and higher and higher. It doesn't, if it came downwards, well, it wouldn't be great, right? It'll just end up crashing, just like that. Just think of it, just keep things very simple. I know there's all this SMC and all this other nonsense out there. Simplify trading, guys. Keep trading super simple. Bullish candle, breakout, price comes back down. Again, look at this. This resistance is the new support. This wick perfectly respects the key level. But look at this. Now, but still don't enter. Why? Because the next candle was bearish. I want to wait for a bullish candle. Then when they're normally the better entries, better signals. Huge bullish candle, 98.58% candle strength in the buyers. Do I still enter? No. Well, I can't enter up here because it'll be too late. I'll have to, if I entered from here, guys, look at this. If I entered from here, well, price has a high chance of coming back and retesting this area. I'm going to wait for price to pretty much come back. Now, what I've seen from back tested data, the candles normally retraces 30 to 50% of the previous candle. If it does it more than that, then even better, right? And in this case it does. Now you want to pretty much wait for a price to come back near the zone, key level, or whatever you want to call it. It comes near enough down here and you could have just taken the entry. The reason why I say it, I mean zone, let me just grab this and what I'm just going to highlight and put it up to here. Now you normally see me drawing this. Why when you see, this is why, guys, when you see me, just one moment, let me go on some of my live trades. I post these in front of the 840 members or whatever we've got, and some of my students as well. If I just show you guys, look at this, there's just key levels drawn, right? Again, here I'm aiming for like 1 to 8s for oil. These are some of the other members, but some of my students posted results over here as well. This was a trade. If I go on winners, and this is why because this game's all about key levels, guys. This is why I'm able to so easily catch these 1 to 8s. These are some of the students' results. There's another student here catching a 1 to 6 on gold. And it's absolutely insane. It's all about keeping things very simple. Now this trade over here, now this is gold, guys. Gold is supposed to be this so-called beast that no one can trade, right? I mean, we can see clearly because of this huge bullish pressure over here and strong bullish candle breakout, it was an obvious sign this was, you know, waiting to happen. As you can see, what's this giving us? Almost 127. You know, having a bit of patience and waiting, guys. And what, 127.69? Like, just, I'm sure it goes to 128. It does go to the 128, but it's just about keeping things very, very simple. Now, of course, you're gonna sometimes get consolidation, zigzag patterns, whatever you want to call them. You know, you get mess. You know, charts could do become a little bit messy. You get fake outs, everything. But then, you know, of course, I show them my one-to-one mentorship how to avoid this. I show much easier refined entry methods. The breakout retest I'm showing here, guys, again, I want to clearly make this clear, it's not mine, that I show to my one-to-one students. But if you are interested, guys, link will be in the video description. Also, check out the other videos I've posted, tons and tons of free value. Check out my other videos. Take care.